Hey, all my fellow and prospective traders. How's everybody doing today? Hope everybody's having a great weekend. Before we get started, I want to share most people are in different time zones, and they're going to be watching the recordings. So this will be recorded in its entirety. But those of you that are live, um, and you want to get the full screen, all you have to do, up at the top left, there should be a bar that you could click on that will give you the full screen. Now, don't worry about questions because at the end, I'm going to answer questions. But I'm going to try not to stop in the middle of the webinar to answer any, in-depth questions. So don't worry about not being able to type in questions or listening to the answers. That's going to come at the end. So if you have any problems or any issues with expanding the screen, let me know. If for some reason it gets frozen, at the top right, there's a red circle with the X in it. Just click on it and reload the platform, and that should fix any issues that you have. So without further ado, we're going to go ahead and get into the webinar. And what this webinar is going to do is answer one of the most popular questions I get every day. And what I'm going to do is just give you some straight answers. It's not going to be it's not going to be a feel good type thing. It's gonna be open and honest with you and tell you exactly what it is. So before we get too deep into it, because some of you are not members, I have to share this with you. I'm not a licensed financial advisor. I'm not a registered broker, and I will not provide investment or financial advice or make investment recommendations. Average Joe Trading is not in the business of transacting trades for anyone else other than me, nor does any service I provide constitute a solicitation, recommendation, promotion, or endorsement of any particular security, other investment product, or transaction or investment. I do not have any affiliates with anybody because, as far as I'm concerned, that is a conflict of interest. So I've chosen not to be an affiliate with like Trade Ideas and some of the brokers and all of that. That's my decision. So I am complete and alone on an island here. So for those of you who don't know me, I'll give you a quick background. I am an automotive engineer as well as a professional educator. My last job was teaching, and I actually still teach. I teach classes for the new teachers or teachers who are coming into the industry or coming into education from the industry, and they have to take their certification classes and get their teacher license, and I teach those classes that they're required to take. So I do still teach. I've been in and out of the market since 1999. I really had no clue of what I was doing back then, but I started day trading full time alongside my day job in January 2014. Now, I was a teacher, so I was able to be a little bit creative. And I'm sure you can be creative with just about any job you're in. I work with a guy who works in construction who has a laptop and monitor in his truck that he can go to throughout the day. Has Wi-Fi in his truck, so it's just a matter of being creative, and that's kind of what I did. So, I took the strategies and principles and processes that I learned in engineering career and education and brought that into trading, and that's been the keys to my success. It's not stuff that I learned from other people. It's how I'm able to put it together and build that process. I'm going to share some of that with you today as well. I took several educational programs to learn the fundamentals of day trading, and through that, I've been able to really define myself as a trader who trades small. I, now for me, trading small, it's up to 1,000, sometimes 1,500 shares, but that's small compared to some of the professional traders. I'm comfortable in my skin. I'm comfortable where I am, and I know how to make money doing what I'm doing. But it's no secret, if you read my blog, if you followed me over the last several years, you know that the journey I've taken. You know the rooms that I've been in. I'll never hide that. I'll never deny that. Every stop I made has helped get me to where I am, and that's something that I'll never forget. So basically, I started back in 2014 with $1,500. It was the first and only kind of bonus check I got. Schools don't really give bonus checks, but this time they kind of messed up with the money they had. They didn't pay us our raises at the beginning of the year, so it just ended up as a bonus check around Christmas time. So I could have either spent it for Christmas or invested in myself so that I can try and help my family reach the goals that we had set. So I started it in SureTrader. Back then, Tim Sykes got me excited, and I joined his community, got Speed Trader account, because at that time we got a rebate just by signing up through Tim, and spent about 3 months in his room, but really only spent a month before I realized that's not what I wanted to do. I didn't like penny stocks, and then I started looking at listed stocks. So I made that transition really quick. Now I refunded that account 5 or 6 times, but not with a full $1,500. At that time, SureTrader allowed you to deposit whatever you wanted. It didn't have to be $500 like it is now. So if I made an extra $150 in side jobs or odd jobs, I would deposit that. And, that's what I meant by, I don't really know how many times. I can't really say I refunded it 6 times with just $1,500. It was bits and pieces as I moved along. But by the end of 2014, I had $9,800 in my account, and I had pretty much come up with a process that helped me be consistent and make money. I wasn't making money hand over the fist, but I was consistently putting money in my account every week, every month. So at the beginning of 2015, I decided I'm going to start every month with $5,000, and whatever I make, I wire out, and whatever I lost, I'll wire back in. That was, the idea. So fortunately for me, 2015 was a great year. It was a real strong year in the market, and I grew that $5,000 pretty quick. Every month I would wire out, start over, wire out, start over. And that's well documented. Um, I posted every trade. I went through every trade. Um, it was verified and profitably. It was everything through 2015. You can go through my blog. I did everything. So you could see the process I went through. And I think that video is still out there, as a matter of fact, that I did with Warrior Trading. You know, because that's the room I was in at the time when I went through all of that. So currently, I started Average Joe Trading because I wanted to be able to help traders who were in my position. You know, an average guy who will never be able to really save up $30,000 to open up a trading account. You know, I was just not in that position. We were living paycheck to paycheck. I was doing everything I can to make sure my family had everything they needed and we could live a nice life. You know, because in my mind, tomorrow's not guaranteed. So I could sit here and suffer for years, and I saw that happen with too many of my friends that suffered through, didn't do, and they were gone from here before they even got a chance to enjoy anything in life. So my thing was, I'm not going down that road. And, you know, my drive has been my family. So I've started over multiple times in the community, back at like $1,500 or so. Recently, back in April, I started over with $1,800 and made over $3,000. You know, so I got called out and said, "Hey, you're moving too fast." You know, a lot of us, we're still stuck. You know, you're up here, you've almost got your $5,000 you're looking for at the end of the quarter, but we're still back here. So I decided to come back. We're gonna start with $1,000, which obviously is not what I recommend, but we're gonna do it. And I've kind of been hanging around waiting to try to get everybody in that wants to be in and wants to kind of follow along with us. So when August hits, I'm not looking back. Well, actually, when I start this week, which is, you know, close enough, I'm not looking back. We're going to continue going. I'm going to take it slow and easy, but, you know, I want to be there and I want to be the model to help you guys get to where you want to be. All right, so let's answer the question, guys. How do we start day trading with $1,000? Okay, but you know, we have to understand first, it is a long-term process. It's not something that you're going to do somebody's asking me what time does a webinar start. Now, it's not something that you're going to do overnight. Not something that we can do in a month's time. You know, but there's some things that we have to accept moving forward. You cannot make a living day trading with $1,000. You can't do it. Okay, I know I'm a big believer in not saying can't and not saying you can't do anything that you set your mind out to, but this is something that the likelihood of this actually happening is so remote. I'm going to say you can't do it. Okay? The other thing you can't have that lottery mentality, and that's what a lot of guys come in to this day trading with. You know, they come in and it's like buying these tickets here. It's like, you know, I could invest $2 and potentially make $50,000, or I can invest $1 and make $7,000. I mean, that's the mentality that these guys come in with. And I came in with that same mentality. I'm not going to lie. I was one of these guys because I was an avid lottery player. I had come up with a way to play these scratch offs that ensured me not really losing any money. If I lost very small, but I would make a little bit more than I lost. Well, eventually they changed the providers for the tickets, had a different algorithm, and I just never got back into it because I was trading by then. But we had that type mentality does not last long. You may get lucky and hit a little bit here and there, but it just doesn't last long. We can't have that mentality that we can invest a little bit of money and then, blow up. All of a sudden, we scratch a ticket and we're winners. It doesn't work that way. Or we buy a lottery ticket and a Powerball ticket, and next thing you know, we're millionaires. But the thing about the lottery, the people that actually do win the jackpots, over 70% of them end up bankrupt in 5 years because they didn't have the skill to manage the money that they did win. So that's another lesson that we're going to talk about down the road. But you can learn how to day trade with $1,000. If you learn how to trade, that's going to sustain you over the rest of your life. So, and I know a lot of professional traders, they tell you, it's impossible to day trade with $1,000. You need more capital. But the reality is, the more capital you have, the more money you can lose if you don't know what you're doing. So it doesn't matter how much money you have. If you haven't developed the skill, you're not going to make money anyway. So it's not about the money. It's about developing the skill at this point. You scale up gradually as you develop the skill. It's like we start with 100 shares, and let's say in 2 months we make about $1,000. Now we're able to maybe take 200 shares of a stock that we can only take 100 shares of. So we'll end up making double the money on winning trades. We don't do anything with our risk as far as how much we're risking per trade in terms of our max loss, but we've doubled our position size. Our skill is a little bit better. We're sharper. We're able to find the trades that give us the best potential a little bit better, and we're going to continually to grow. And you grow only as fast as your ability takes you. And your ability is not only your skill, it's your psychological, the psychological problems. All right, so what you got to realize also, you need basic trading education. You don't have to spend any money for it, but you need basic trading education. We'll talk about that in a minute. It's going to take time to get comfortable trading with your money. Okay, starting in a simulator is great. You got people that has been in simulators for 3 years. They're just comfortable in it, and they can post their simulated winnings, and they got an audience, and they feel good about it and everything. So it's crazy. How much people put emphasis on the simulator. But unless you feel the burn, feel the pain with your money on the line, it's pretty difficult. Okay, it is pretty difficult to it's pretty difficult to duplicate that. It's hard to duplicate having your own skin in the game. You got to have a process that includes a profitable strategy. There's several things that traders get caught up in. And it doesn't matter how much money they have. They fail to master a trading strategy. They may get hooked onto one that's profitable, but they don't master it. They keep moving on from guru to guru or furu to furu, whatever you want to call them. But they move around. And these guys are trading strategies that would work, but it has to fit you. It has to fit your personality, and then you have to master it. Another problem is risk management that comes along with it. There's no semblance of risk management that they're engaged in. And they don't understand the psychological aspect of trading that comes with having your own money out there on the line. Last but not least, you got to have realistic expectations. Without these realistic expectations, understanding that you start with $1,000 and by the end of the month you have 8 or 10,000, and I know there are people out there that advertise that. It's not realistic for a brand new, inexperienced trader. I feel like I've got a good chance of doing it. If I trade freely and use all of the skills I have to the best of my ability, yeah, I could probably do it. But I've been trading long enough to be able to do it. But the average trader who's just coming in, who's just learning, or who's been struggling for the last year or two, it's not going to happen. There's no light bulb that's going to turn on that's going to get you there. Now, is it possible to hook up with the one penny stock that jumps up 1,000% and you make it? Yeah, there's a real possibility. And let me share this story with you real quick. I spent 2 hours of my time talking to a trader that he was in my room for 3 months and did realize some growth. He realized the fact that he was growing, but it wasn't at the end of 3 months. He felt that he should have been further along, that he should have been making more money. And so he started looking at what other people were posting and on YouTube and Facebook, and it's like, man, I should be able to make more money. I think I'm there. So he leaves, he joins this other room. First day in the room, he shoots me an email, shows me his P&L. It's like 130. He's made $3,800. I'm like, wow. This is awesome. I still want to feel like I had a lot to do with you being able to make this. But I don't know what strategy you used. I don't know what you did. But I didn't really say anything. I was like, great. So Friday came, and I was thinking about it that evening, so I emailed him. Didn't get a response back. And I was like, well, maybe he's out spending his money or whatever. So last Tuesday, I'm laid up. Can't do anything. Can't go nowhere. I'm stuck all the time in the world. So I emailed him again. No response. So I didn't think anything else of it. But I got a response Thursday. And he apologized. He said he had to take some time off. Because after that Monday, by Wednesday, not only did he lose the money that he made that Monday, but he lost his whole account. Everything was gone. He had nothing left. Actually owed money. And, I felt bad for him. And so we ended up talking, and he realized that, he needed to be patient, that he developed skills, but what he was doing was gambling. He was just risking. He was just trying to jump on stuff because other people were saying that they were doing it, and he didn't realize that they were posting after the stuff had already moved. So, he didn't know whether they were doing it or not. But the thing is, he realized he needed to have realistic expectations, and that this stuff does not happen overnight. And if you do get lucky, put your money up, save it, so that you can keep adding to it. But don't change the way you're moving in your trading. So that was great. That was a great lesson, and it was worth the 2 hours I invested talking to him, because it helped me as well. All right, so we have a wealth of information on YouTube now. But what you've got to do is find education that's presented in a logical sequence. And you got to pick a spot. Don't watch every Tom, Dick, and Harry's videos. You want to find the Tom, Dick, and Harry that's trading similar to you, that has a similar belief, that has a similar style, similar personalities, because everybody's going to trade differently. There's some people that love that high risk gambling type feeling that you get from trading penny stocks. They love it. They feed off of it, and they can excel in that. I can't. I know that's not me. It doesn't fit my personality. And I know I'm from the South. I like things slow and easy, and I have no shame in saying that. But you have to pick a spot. And there's a lot of free stuff out there. You don't have to pay thousands of dollars to get that. And to give you an example, you got Nate and Cam here at Investors Underground. I was in that room for like 3 months during the beginning. I actually bought both of his DVDs. This is where I learned all of the fundamentals of trading, the basics of trading. They didn't have this free class out like they do now on YouTube. And you see, remember what I told you. This is in sequence, it's logical sequence, it makes sense. And it's taught by people who are proven to be traders. And it's been around for a long time. They didn't just pop up overnight. And they know what they're talking about. So I learned a lot from that. So, I wish this would have been out back then. I wouldn't have had to spend a couple $1,000s on videos. But the fact is, they have this out there. It's on YouTube. It's free. And this gives you a good idea, a good foundation of what trading is, and some things that you should know before you start looking into really trading. You'll have an idea if this is what you want to do or not. Also, here's Kunal. He's from Bulls on Wall Street. Now, everybody probably knows this guy because he is like a bundle of energy and always fun to watch. And I've gone through his, free live 4-day course before. It's a good course for beginners. Now, this guy, he gets out there sometimes. He may go off, in left field a little bit, but that's who he is. That's his personality. But you can learn a lot from him as well. So this actually starts tonight. So you could go and try to catch and get in on this. And this is free. And just another example of a lot of the stuff you can get out there for free. You just have to find something that's presented in a logical sequence, pick a spot, and do it. Don't kick out thousands of dollars to learn the basics of trading. It's not worth it, because a lot of times you'll never make it back. So, and I talked about picking a strategy. I have a strategy that I'm going to share with you here in a little bit. it's an opening range breakout or breakdown, that is successful over 70% of the time. The failure rate is less than 30%. But here's the catch. It's only successful 70% of the time if it's executed correctly. And if you're in the room, you know I don't execute that strategy correctly a lot. So I'm not hitting 70%. I mean, I was at one time, but, sometimes the pressure, gets to me and I take trades that I shouldn't. But this is a strategy that's proven and has withstood the test of time. We just have to learn how to execute it. So let's look at some numbers here, or by the numbers. So we're starting with a $1,000 SureTrader account. Now, I say SureTrader, you don't have to start with SureTrader. There's TradeNet, which is a prop firm, but that's a little bit different. You got to kick out some money up front for their education. They'll give you a funded account, but that's specifically for traders who can't, come up and meet the PDT rule. You've got other brokers that cater to traders outside of the United States, that you can get in with smaller amounts. But SureTrader is what I started with. A lot of times that's pretty much all we in the U.S. can end up with. So that's what I'm going to use. So you get 6 times the buying power. So you got $6,000 of buying power. The elephant in the room on SureTrader is it's $4.95 commissions. If you stay with them and you prove to be a moderately successful trader, they will negotiate commissions with you. I've got it negotiated way down for me. But we're using the $4.95 deal. Really, that doesn't come off until the trade clears at the end of the night. That's when we get the rebate for the commissions. But on the platform, it shows $4.95, and that's what I'm sharing with you guys. Per ticket. Then you got a couple of other fees. So a 100 share position, the total cost is going to be like $5.85 per ticket. So every time you go in a trade, that's $5.85. Out of trade, $5.85. But really, to make it easy, we can round it up to $6. Okay, risk management. That's something that a lot of us don't take into consideration when we start trading. You have to manage your risk. If you don't manage your risk, it's not going to work for you. And we'll show you that by the numbers here in a minute. You only want to risk $50 per trade, which is 5% of your account. That's a lot. 5% is huge, but when you're trading small, you got to incur a little bit more risk. I would not risk $100, especially starting out. That's 10% of your account. You lose on the first 3 trades or 4 trades because, it may be that you didn't execute right or you're having trouble figuring out how to do it. Before you know it, you've lost half your account and you can't really trade anything because your buying power is so low. Also, you only want to risk 90% of your buying power because here's what happens. Let's say I shorted 100 shares of a $59.10 stock. That takes up $5,910 of my buying power minus the $6. So let's just say $59.20. I've got $80 in buying power left. And the stock jumps on me. Okay, it flies up. I don't get a chance to really put in a stop order. It flies up to $60. So you're going to have to put in a buy order for 100 shares to get out, which is looking for $6,000. What the platform does is it looks to see if you have enough buying power to cover the order. Now, theoretically, it's supposed to know that you're in a trade, and allow you to put in an order that's going to take you out of that trade. But what happens to the platform is when you go negative, because the order has taken you over what your 61 buying power would be, there's a glitch in it. It's not a sure trader problem. It was a DOS problem, because it happened to me in Speed Trader. It happened to me in IB, because I use DOS with my IB account. It happened in all three accounts. It was a DOS issue. They may have it fixed now, because I haven't maxed out my buying power yet. But let's say you max out your buying power and it goes against you. We were having a hard time getting out of the trade. And because of that, we were blaming everybody every time, Dick, and Harry. So we can't do that. We have to be more aware of our buying power. So I always say never max out your buying power. And this is what happens. So it's not somebody, contrary to popular belief, it's not somebody sitting there watching you go up in smoke and wanting you to lose all of your money before they let you out. That's not the way it works. It was just a programming issue that happens, and they had to fix it, because basically all of these brokers run off the same DOS server, or there is one server that they share that data gets fed off of. So you got to be careful with that. Also, the minimum risk reward that we're looking for is going to be 2 to 1. All right, so I'm looking for stocks between $10 and $50, because I only want to use 90% of my buying power. So if I got $6,000 in buying power, then I only want to use $5,000, and $50 is the max that I'm going to look for. The stocks have to be over 50 million share float, but I've got to see $100 profit potential in that stock for me to trade it. I've got to see that, because remember, I'm going to risk $50. If there's not potential for $100 profit to be made, no sense in taking that trade. No, there's no reason to. You got to have volume. You got to have a catalyst. All of this is very important. And where do I find it? I have a scan that I use from Trade Ideas that helps me find the stocks that I'm looking for. And we're going to talk about that here in a minute when we go over this strategy. FinViz is what I use to verify the catalyst, find the news that I need on it. Also do some crowdsourcing. So everything that I need, I can find. FinViz is a free service. Trade Ideas is a paid service. So I've got a good mix of both. Okay, so let's look at this by the numbers here. So let's see if it can make sense to you. We're going to risk $50 to make $100. And let's say our strategy, we had a 65% win rate. We took 28 trades that month. All right, so we had 19 winning trades. Well, we made $1,900. Sounds great. We had 9 losing trades, and let's say we stuck to our $50 max loss. So on 9 losing trades, I've got $450 in losses here. So we've got a gross profit of $1,450. Not bad trading with $1,000. For the month, and we only took 28 trades. But there's an elephant in the room. We've got commissions. That's going to take a chunk out of this. So our commissions and fees, we know I'm basing it on $6 per ticket, 28 trades. We've got a commission cost of $336, which is going to give us a net profit for the month of $11.14. Now, this is, you know, our winning trades averaging $1,900. I'm not saying every trade is $100. Some trades may be $160. Some trades may only make $60 because it failed to push. But on an average, this is what we're looking at, an average at the end of the month of $1,900. Now, losing trades, we did what we were supposed to do. We stuck to our loss, our max loss. You know, we might have had some slippage on one or two, but we cut it off early because it took out our technical stop on some others, so it balanced out. Still, we're looking at an average here. This is realistic results. Trading with a $1,000 account at the end of the month, these are realistic results. Well, I'm saying $6 each, $12 a trade. Okay, 28 trades is in and out. So it's 28 times 12. That's $336. All right, so let's say you're at work. You can't really take a whole lot of trades, or your time in the market is limited. Or let's say you only had a 50% win rate. You know, you're struggling on learning the strategy, knowing which trades to take. You're having trouble. And so you only, out of 28 trades, you only have 14 winning trades and 14 losing trades. So these are two scenarios. It's going to come out to the same amount. So either we have a 50% win rate, or let's just say we only took 14 trades because we were busy, we were at work, we couldn't really trade a lot. Either way, if you're doing what you're supposed to do, if you have the right strategy, if you're managing your risk right, even if you're screwing up, you're going to make some money. So that's how, with me screwing up sometimes the way I do and end up with a 50% win rate at the end of the month, that's how I can end up green. It's a matter of sticking to your risk management strategy, not going outside of it. And if you do, you know, not making a habit of it. And you're going to be able to make money. Okay, so the simple strategy, the one that I use, and I'm going to show you and take you through today, it's been around for more than 50 years. It's one of the most popular strategies to this day. People call it different things. All it is based on different time frames. So people can call it this, call it that. It's just based on different time frames. So there are several professional traders and fund managers that still use this opening range as their primary method to set their entries and exits for the day. The opening range is really the highest price and the lowest price traded during whatever time frame you're measuring. For me, it's going to be the 5 minute. Okay, it's going to be the 5 minute time frame. And we're going to look at it here in a second. So you'll be able to figure that out as soon as we get into it. So the candidates, they have to hit my ORB pre-market scan, which I showed you. What that scan is looking for, just to some, to make it easy for you to understand, it's looking for stocks that have got up or down at least $1. Anything less than $1 is not going to show up on the scan. Or if it gaps up $1 and then it goes below, it will fall off the scan. The stock has to have at least 50,000 shares traded before it hits my scan. And we're all looking at pre-market. The float has to be less than 500 million shares. Now, I will trade a higher float depending on the stock, but that's not my main watch. I'm really looking for those stocks that are less than 500 million share float. Now, because we have other people in the room that trade stocks under $10 and that trade stocks under $1 ATR and under 50 million share float, I let those stocks come up on my scan for them. So what I have to do is go through and filter out the ones that are over $10 I want to watch. The ones that are over the ATR over $1 I want to watch. Got to have a solid catalyst. A lot of these that show up on here are stocks that are doing secondary offerings. I don't trade those, or a buyout, and I don't typically trade those because once they hit the buyout price or once they hit the offer price, then they won't go up or down anymore. Nothing. So they're not worth me trading. I'm not going to get $100 out of them, most likely. So, and I look for a solid daily chart. All right, so let's take a look at our watch list from yesterday. What's the day? Sunday? Friday. This was the scan from Friday morning at 9 o'clock. That's when I cut off looking for stocks to put on my watch list. My watch list has to be done by 9 o'clock so that I can get ready for the open. I can build my trade plan. I can start looking at what the stock is doing, how it's moving, what volume is coming in, and all that good stuff. So you can see SKX hit my scan. We had a $9.17 drop, a 27% drop from the close price of yesterday to where we're trading now. Here's the big drop. This was on earnings. We know this. So what I'm doing is I look at where we are on the 5-minute. What does it look like? I just buzz through this and I can automatically eliminate this ZYNE. Now I know a lot of small cap traders traded this thing. They might have made some money on it, whatever. One of the reasons I don't trade this stuff is because 9 times out of 10, sure trader is going to put it on margin restriction. Okay, they don't trust you using their money to trade these stocks. And if you're inexperienced, I wouldn't trust you either. I wouldn't trust me. So I don't have a problem with them doing that. It's just that if we have a small account and we can't use margin, our hands are tied. So why sit there and get frustrated looking at this stuff when you can't really trade it? And it's not really tradable for you. So I eliminate that. I don't even think about it. So I'm looking at these. And guess what? These two stocks were not margin restricted. These were solid stocks that would give us moves where we can make some decent money and move on. So SKX, what I did was I looked at the daily chart and saw that we had gapped down. Now you got to ignore this white line. This is where it closed on Friday. So this was not on the chart on Friday morning. So what I was looking at was, this was the 52-week low. This was prior. This was further than a year out. Okay, we're in the middle of July here. So this isn't seen. This is the 52-week low. So we were trading down close to this 52-week low. And knowing the way stocks trade, and this is what you learn by watching, live trading every day in chat, or watching the market live every day for yourself. This is what you learn. And we see that this is hitting a 52-week low. So it's going to do one or two things. It's going to bounce. And if it bounces, do I have enough room to make money? Absolutely. There's enough room up here before it hits these levels of resistance. I would draw a line across here. This is the next level of resistance that we'll run into. I've got plenty enough to make $100. Actually, this is a $24 stock. We could trade 200 shares with this. All we would need is a 50-cent move to make $100. That would make this trade make sense. Now, are we only looking for $100 and take it off? No. We're looking for more than $100 potential on our trade. Because anything less, our risk reward parameters fall out of whack. And that's when we start losing money, because we're not following the proper risk reward. So now, let's go to the next one. This is STT. This is the other stock we were looking at. Okay, look at the price action here going into the open. Look how ugly that is. And you can compare it, if you have a mental picture of the 5-minute on SKX and how smooth that price action was, look at this. So I'm going to pick the stock that gives me the smoother price action. Okay, another reason why I couldn't pick this stock was this was an $89, well, an $87, $88 stock. And if we're trading with a $1,000 account, you can't buy 100 shares of this. If I can't buy 100 shares of it, I'm not trading it. Unless there's a stock that has a potential 5 or 6 point move, then 50 shares make sense, because you can make several $100s on it. But this didn't have that in it, or I didn't see that in it, so it wasn't one that I was going to trade. Plus, the SKX gave me the best look. And you can see here, we looked at the daily chart. And, okay, again, ignore the white line because I wasn't there on Friday. Here is, this marks, anything behind this is beyond the 52-week mark. I'm only looking at what happened in the last year. And we have got down below the 52-week low. And we were gapping down to some support outside of the 52 weeks. So for me, I said, if this thing started to push up, we had plenty of room. If it started to sell off, we had plenty of room. Plenty of room for potential. Okay, again, we're trading small. Let's say I have grown my account to $1,600. I could probably take this stock. So we still want to look at these and watch them and see what they do. At the end of the day, we still want to look and see what happened with them, because it won't be long before we're able to trade these stocks And we want to have some data on higher price stocks as well. But in this case, we decided to go with SKX. Okay, so SKX open. Look at the big volume spike on the first 5-minute candle. No, huge, almost 3 million in volume on the first 5-minute candle. But what do you guys notice about this? You had this incredible increase in volume, but the range on this candle stayed extremely tight. You would think with all of this selling volume that the bottom would fall out of the stock. It didn't. So that should tell us right there, the bottom didn't fall out. This is probably going to go long. We're probably going to get a bounce because all of this selling and the support held it up. We need to have our minds open for a bounce. So even though I was short biased on this, and anybody with common sense would be short biased on this because it rejected the 50 like 3 times. We've been trading under all of the moving averages in VWAP. We tried to bounce up here. We just couldn't do it. But this is a telltale sign that, hey, you better not be too short biased. You better be ready to go both ways. And one of the keys to this is having a trade plan so that you can trade this both ways. If the potential exists going to the long side, you want to have it mapped out and you want to know where the best place to get in and out. That's why I build my watch list at 9 o'clock and give myself 30 minutes to really go through this and figure out which way we're going to go. All right, so let's mark this out. So let's blow this up. I've got the 5-minute high, 5-minute low. I'm going to mark it out. Once this candle prints, I'm going to mark it out. Now, if you're using Thinkorswim, I have a script that automatically marks it for you. But on DOS, we don't have that. So I have to actually mark it on my own. And you know, I'm sharing my actual trading platform with you in chat. So I have to use the DOS chart, you know, when I'm trading. So I have to mark all of these. Now, if you were trading a 1 minute, then you would have a 1 minute chart and you would mark the first 1 minute candle. If you're trading a 2 minute opening range breakout, then you would mark the 2 minute. 5, like we did, you would mark the 5-minute candle. 15 minutes, and that's where I started. I started with the 15-minute opening range breakout. I was trading that exclusively until I got a little bit better. The market changed. Things started to move a little bit quicker, and I moved to the 5-minute. Now the 1 minute and the 2 minute and the 3 minute gives too many false breakouts. They do work, but they give too many false breakouts. You get stopped out too easy before it actually works. Therefore, the accuracy rate on that is going to be very low. So I stay away from that. I stick to the 5-minute. So we wait for this candle to open, to print. We've got it printed. Now we've got this mark. Let's go to the next candle. And damn, it did exactly what we thought it was going to do based on what this candle did. Huge selling volume. This thing didn't go anywhere. Then all of a sudden the buyers came in and took back over. And we got it bought up. Now there are 2 entry strategies. One is going to be a little bit more riskier than the other. Therefore, the success rate on that strategy is not going to be as high. So you have to decide, am I going to take the riskier entry, which is as soon as this candle broke the high or this level here that we drew, we take it long. But there's some reasons why you don't want to do that. One big reason is you've got a level of resistance sitting above it that has shown to slap these trades down pre-market. So it would be an incredible risk to get in here looking for it to move up. Now, you can see this stock did run all the way up close to 25, which would have given you a chance to take profit. So yeah, it could have kind of worked out in this case, but you would have had to have been quick to catch this. Now, the next entry is a little bit safer entry. Is you let this candle close, and because we're dealing with the 50 here, we look for a candle to close above the 50, confirm it, and then make the move. So here we are. We get a candle to move above the 50. Everything, we look at the moving averages and everything's trending up. Everything is showing support and an upward trend. So for me, this automatically became a long bias trade, and I started looking long. So right here is going to be the entry. This candle print, it started pushing up. Soon as it broke the high of this candle, we entered the trade. And our risk is on the 50 right here. Now we have our $50 per trade risk, which we're going to set. If we were in this 200 shares, our max loss stop would be 25 cents away from our entry. But before that, our technical stop. The technical stop meaning if we lose this level, the trade plan is dead. That's what the technical level is. But because we're in smaller size, we've got to use the 50. If I was in a larger account, I would use this level here because the moving averages and the VWAP have crossed over this. I'd be able to give it more room. But because we are in small, we don't want to risk too much of our account because we're trying to grow it. We used that stop, but we waited until we got confirmation, which this thing never looked back. Once it kept going, it never looked back. We made it right up to the 100-day. With 200 shares, it's probably $160, $170 trade. We hit there and we're out. But if you're a smart fellow like me, somebody who thinks they know more than the average person, I'll take some off here and look for it to continue to push up. Well, look for it to continue to push up and get more profit. That doesn't always work. So the smart thing to do when we're starting with 1,000 shares and we're risking 50 to make 100, we know this has the potential to make more than 100. We're just looking for it to hit our target, and we get in, wait for it to hit our target, and we get out. Simple. And in the beginning, this is when we shut down. We take that one trade a day, take it, we make $160 on this, shut it down. If you want to trade, paper trade. Because I guarantee you, until the market turns around, it's going to be easy to lose money on this. On a secondary trade. Why do I say that? Because my dumb ass gave back too much profit, trying to work something and the market just wasn't there yet. And I know it. But what happened was I was even more of a jackass Thursday and lost over $200. So now I'm going to try to get it all back on this one trade. Sound familiar? This is what we got to guard against. And everybody has these issues. I don't care how long you've been trading, how much of a professional you are. The only thing that saved me is because I have the skill set that I have, and I was able to not sit here and let this thing go and, take back all the profit. But what I did was perfect entry, just like I showed you over here. That perfect entry that we got right over the high of this candle, went right up to the 100, took my profit at the 100, which was my first target, and turned around. I took some more profit up here through 26, but it came back, and because I wanted to make too much money, I added back. Big mistake. You never want to do that when you're in that in that situation. Never want to do that. But this was a good sign of what not to do. And I only traded 100 shares because of what I did the day before. I was on medication all week, and you don't want to trade on medication. That was the mistake I made on Thursday. So I had my mini-me, manage this trade. Did an excellent job and actually pulled a rabbit out of the hat for me. But this is an example of trades that we could take every day. And we're just patient. This should have been one trade and done. Waited for the next setup. The next setup is over the 100. So we got in over the 100. Did get a pullback here, but guess what? It never confirmed a loss of this 20 here. A confirmation would have been this candle opening and trading lower than this candle. Was not a confirmation, and you can see it pretty much ran up and just grinded itself up, which is what it does in slow markets. So you have to be patient to allow trades to work after the morning session. But this is the type, for those of you who aren't in the community, these are the type trades that you see happening every day. Every morning, because it's easy. How easy is it for me to show you on here where the entry would be? That, okay, as soon as we break this is where you enter. Okay, how easy is that to see? But you guys know, when the market starts moving and these candles start flashing, prices start flashing, how hard is it to nail an entry? How hard is it to do? So the best way to learn is to see it happen. Is to be in a place and to see it happen. I didn't have this when I was learning. It was something that I really, really needed. But I had to fight and struggle through it. And that's, why I started this and why I do the things that I do. So you could see it actually happen live. And our mistakes, the mistakes that we make are things, wait a minute, I'm going the wrong way, sorry. The mistakes that we make are learning experiences. These are the learning experiences that really help define us moving forward. Because these type struggles, they're never going to go away. until they've taught us what they wanted to teach us. Until we learn what they're trying to teach us, these struggles are going to continue. All right, so let's take a look. I referred to Thursday. Oh, well, here's another one. Here's a failure that I wanted to share with you guys. This is from not the past week, but the week before that. Here's a good example of me, of the fear of missing out. And this is what we have trouble with a lot. I mean, a lot. Here's a 5-minute opening range. We broke below this. You can see right off the bat what an idiot I was for taking this trade. Because the same rule that I showed you on SKX about the 50 being too close, here's the 100 right here. No, why would I enter right here other than the fear of missing the whole trade? No reason I should have entered here. You see it held 100, ended up stopping me out, turned into an opening range breakout. A real nice one. Perfect case example of why you have to be patient and where execution is what causes your accuracy level to go down. This can't be considered an opening range failure because it broke the opening range and it made the move. The failure came with the trader executing it. So perfect example here of that. All right, so to sum it up, and then I'll take some questions if you guys have it. Again, you can't make a living day trading a $1,000 account. Can't do it. I mean, I don't say can a lot, but when it comes to something like this, I will say it till I'm blue in the face because I don't want anybody thinking that it is possible. You're going to have to grow your account tremendously in order to have enough capital to comfortably make a living day trading, because you're going to need money in the bank. You're going to need other accounts, maybe a swing account. You don't want the pressure of having to make money out of this account on your back every day. Psychologically, it will beat you in the ground. But you learn. You learn day trading with $1,000 because it's not about the money at this point. It's about developing the skill that you're going to need to get to that next level. You got to have the right broker, one that doesn't enforce the PDT rule, that will allow you margin on a 1K account, and it's got a reliable platform. So it doesn't have to be Sure Trader. It's just that that's what I'm stuck with here in the United States. Okay, but it doesn't have to be that. If you want to trade in a fund, you can do that. If you're outside of the U.S., then you got it made. You don't have a problem at all. You need a basic trading education. I shared with you a couple on YouTube. Guys that I know are straight up. But you got to pick a spot. You got to find guys that you can connect with that can help you get to where you need to be. All right, seller, have fun. All right, you got to find a reliable, consistent, and profitable strategy. Okay? You got to find that reliable, consistent, and profitable. You got to be able to find the right stocks to trade. And last but not least, you got to have the proper risk management. You got to. Without the proper risk management, it's not going to happen for you. You're going to end up losing money, losing more than you make. There's acceptable loss in trading. If you can't accept the acceptable loss, then you're not going to make it as a trader. It's just part of what has to happen. Just like if you're in the restaurant business, you've got food that you know is going to perish, that you know you're going to have to lose. But the worst thing is not having enough to serve your customers. So you have to expect that loss so that you can have enough in case you need it. You know, in trading, we're kind of the same way. We've got to be able to accept that loss. I'm factoring in margin. When when I went through the numbers, it was based on 6-to-1 margin. All of the numbers that I went through, that's what it was based on, 6-to-1. So you got to use that margin. All right, so like I said, if you want to join in with us, if you want to watch me trade live every day and go through the process, the special I offered is going to be up until probably the end of next week. But like I said, once we start, we're not starting back over. We're going through the end of the year, and we're going to be building on from that. The special that I made for the quarterly one is to really get you not worrying about the subscription or making a payment, that you can just focus on your trading until December 30th. And hopefully, as a Christmas present to your significant other, you could give them, you probably don't want to pull any money out yet, but you want to show them a copy of your broker statement where you're making money. And that is going to be key. The platforms I recommend, if you're going to trade, depending on what broker you're using, with me, the brokers that I use DOS with. The only brokers that doesn't have DOS obviously is TD Ameritrade and USAA. The USAA is what I have mine and my wife's IRA in that I manage, but I don't need a platform for that. But TD Ameritrade has a lot of free tools and is very powerful. You just can't trade a small account out of it. Yeah, USAA was supposed to have a trading platform. Several years ago, they came in and said that they were merging with somebody and that they were going to have this platform, but they didn't. IB is good if you're outside of the U.S. If you're in the U.S., then they're going to enforce the PDT rule. But you got to have 10 grand to open an account with IB. Unless they've changed it. All right, guys. So, any questions? This is the time for any questions about anything that we covered. If you don't understand, my logic and how you can day trade with $1,000, speak now, forever hold your peace. No, IB U.S. citizens, IB will hold you to the PDT rule. Yeah, if you're on the one trade a day rule and you get stopped out on your first trade, you're done. The worst thing you can do is start trying to trade and make up for it. You're building discipline is what you're doing at that point. Remember, when we're trading this small, we're trying to build discipline. And that's what it's all about. It's about building that discipline. And for most of us, it has to be beat in our heads. Let me see. Handling taxes with SureTrader is not any different than you having to report from any other broker. It's just that they're not required to give you the form. So it has to be manual. And I don't even rack my brain with that. I go, you know, I just download everything. This year, I just gave my login information to my accountant and let him deal with it. I don't get into trigger orders and all that stuff. I have no use for it. Yeah, the ORB strategy is covered in detail in the day trading class. It is. Plus, we talk about it every day in the room as well. So, any questions, anything that comes about the strategies that we trade, we talk about it right there live because you see me trade it every day. That's the strategy that I trade every morning. Yeah, I can give you a to-do list or a checkoff list, that a new trader needs to have when they start. We pretty much went over the main ones today. But yeah. Well, Randy, I'm gonna tell you, I don't know. I don't know if you have to do it if you have over 10K. Um, Now, what my guy told me is that if at the end of the year you don't have 10K in there, then you don't have to report it. So what I was doing was just wiring out before I got to that. I never let it build up. So, but I don't know the law. I'm not going to even try to pretend I know the law. That's why I have to pay somebody to do it. I don't want to know it. Well, you don't have if you have a Mac, you can run everything Windows based on Boot Camp. There are a lot of guys that have Macs and all they do is use Boot Camp. And they don't have to buy a new yeah, but JC hit the nail right on the head. There are certain things that you do not need to even worry about until you're profitable. If you can't make $1,000 in a year, I wouldn't even worry about what to do if you made 10. You got to worry about trying to make that $1,000 first. I mean, I'm not gonna lie. I'm being straight up with you. I'm not gonna lie. The reason why a lot of traders fail and get themselves in trouble is because they worry about so much shit that you don't need to worry about. At this point, you need to worry about learning how to trade and being green at the end of every week. That's what matters. Yeah. So you worry about that at the end of the year. You know what you do now every day doesn't really matter. It all matters at the end of the year. And this thing here, the taxes dealing with traders is so complicated, and the laws of trading are changing so fast. My recommendation is that if you're gonna trade, you want to look at getting an accountant or that knows about this stuff, and you let them deal with it. I'm telling you from experience, because I tried to deal with it one year, and it cost me 8 grand. So I'm not dealing with it anymore. So any advice I can give you, it's gonna be that, buddy. Yeah, too complicated. All right, guys. So those of you who are who watch the recording, if you have any questions, just email me, and I will be glad to answer them for you. Not a problem. Ed at averagejoetrader.com. So thank you guys for hanging out, and I will see you in the market.